Emmanuel Jago, capital market advocate, joining me right here via Zoom. Great to have you on the show.
Yeah, thank you so much, Larry. Thanks for having me here.
Fantastic. Here. All right, I'm sure you followed the last data there from Africa the Big Deal, looking at startup funding, seeing Egypt leading, raising about $1.4 billion in the first half of 2026. How do you see the data?
Well, the data is great. It basically shows that the startup ecosystem is still resilient. And even though the numbers are great, but the issue is not just about the number, just as you showed in your data, it's the drop in the numbers, right? You could see that prior to now, in May, the data was really slow. Africa had already raised about 800 and something, which was about 20% lower than H1 2025. But then right now, we have noticed that, okay, these other companies, Flutterwave and then the Coastal raised some more money, and that took it to 1.4 billion. But then when you look at the numbers and you compare it to the amount of deal flows, you would realize that even though we raised more money, the deal flow reduced from about 150 to about 250 to about less than 150. And that's primarily because investors are now more focused on not just narrative or storytelling raised by founders that were getting equity in like 2 years before now, but they are more focused on founders that have been able to prove themselves. So it's now a build, prove yourself, then raise. So the number of deal flows reduced, even though the number of money that was being raised increased over time. And when you look at the data set, taking it 100% notch, you would find out that about a quarter of that money was basically being raised by just two different companies, Spiros and Flutterwave.
Right. All right. Definitely we keep tracking, the funding, comparing it to, the previous year. And, we've seen a trend, a steady trend, though, with, some of the funding, coming in between first half of 2026 and first half of 2025. Let's flip over now to, the new rules of wealth creation, at this point. In your mind, what has fundamentally changed so far when you compare, wealth creation now to about 10 years ago? Do you think we're still in the same, path?
Yeah, so if you took the data about 10 years ago, Nigerians were mostly interested in real estate. Real estate was the primary and still one of the primary indicators of interest for Nigerians when it comes to investing. But due to the democratization of the capital markets and the whole cross-border analysis and investment thing, it has become a bit more open, and people are now becoming more aware of the fact that they can actually build wealth not just from the real estate market, but from the capital market. So people can now invest in, debt instruments, can now buy equities in companies, and they can basically get dividends, and they can basically use that to plan their retirement or whatever. But prior to now, the narrative has been, when you start making money, build a house, and then leave the house for rental, do commercial real estate. But right now, it's a mixture of real estate. It's a mixture of personal branding, digitization of your products and your experience, and also the whole idea of being able to invest in equities, bonds, and then stocks and the likes. And that has basically been the narrative right now.
All right. Which asset classes would you say are most attractive right now?
Could you come again?
Which asset classes are most attractive right now in your mind?
Are more destructive.
Asset classes are more attractive.
Okay.
Yeah. Which ones do you think should be getting attention now?
Yeah. Okay. Well, for now, I think the equity-based investments should be getting a lot of attention right now, because the Nigerian market, in terms of performance, the capital market in Nigeria has performed really well over the last 2 to 3 years, which is a strong indicator that the next 5 to 10 years is actually going to be an upward trajectory. based on the infusion, the democratization, and the increased participation of both local and international participants. And also, this is basically, so in terms of GDP also, we've basically shown like a very, very strong growth. So in terms of where it's actually going to be much more interesting and much more attractive, the equity market is actually like a very, very strong point for me in terms of argument, yeah.
All right, definitely. We'll keep tracking, how some of these billionaires are making money now, but some still seem to be making money the same way in the past 10 years, but we'll keep tracking them. Thank you so much. That was Emmanuel Jago, capital market advocate. Thanks so much for coming on the show today.
Thank you for having me, Lan.